Hyundai Motor Company, often abbreviated to Hyundai Motors, is a South Korean multinational automotive manufacturer headquartered in Seoul, South Korea. The company was founded in 1967 and has grown to become a major player in the global automotive manufacturing industry. Hyundai produces a wide range of vehicles, including compact and luxury car, SUVs, minivans, truck buses, and other commercial vehicles. The company is known for its advanced technology in electrical vehicles, autonomous driving, and hydrogen fuel cell systems. Hyundai operates the world's largest integrated automobile manufacturing facility in Ulsan, South Korea, which has had an annual production capacity of 1.6 million units. The company employs about 75,000 people worldwide, and its vehicles are sold in 193 countries through 5,000 dealerships and showrooms. In addition to this automotive business, Hyundai also provides vehicle financing and credit card processing services. As of 2022, Hyundai is the world's third largest car maker in terms of production, behind Toyota and Volkswagen. Hyundai operates in a highly regulated environment. International trade regulations can affect various aspects of its operations, from cost of exporting cars to market competitiveness. For instance, trade tariffs can increase the cost of Hyundai vehicles in foreign markets, which could influence its pricing strategy. Now we'll do an analysis of the international trade. Uh, First of all, trade agreements. International trade agreements are pivotal for Hyundai to operate in the global market. Strategies related to various trade tariffs and barriers, as well as federal trade agreements, impact Hyundai's overall operations, competitive positioning, and market access. For instance, the FTA between USA and South Korea might provide Hyundai with tariff advantage, giving them a competitive edge in the US market. However, talking about the impact on operations, it's essential for Hyundai to monitor worldwide international trade dynamics to strategically plan and avoid perfectionist trade environment uh, in the key markets. This may impact companies' manufacturing and assembly due to unfavorable high tariffs. Coming to FDI analysis, FDI policies can impact Hyundai's ability to establish and run its business successfully in global markets. Hyundai has taken advantage of favorable conditions of capital for FDI abroad for operations such as manufacturing, research, and development. For example, Hyundai has engaged in new enterprises around the world that range from heavy chemical industry to high tech industry through its foreign investment program. For instance, Hyundai's decision to invest in manufacturing facilities in the US state of Georgia might have been influenced by favorable FDI regulations, tax incentives, and access to vast consumer market. Now, talking about the industry specific regulations, Hyundai must also adhere to industry specific regulations. These include safety standards, emission standards, and other automotive specific regulations. For instance, Hyundai Supply Code of Conduct requests that suppliers comply with rules and regulations applicable to corporate management, as well as adopt best practices concerning ethics, environment, labor, human rights, safety and health, and management systems. Given the global shift toward green energy, regulations promoting electric vehicles provide Hyundai with both opportunities and challenges. Countries with incentives for electric vehicles might be attractive for Hyundai's EV models like Ioniq 5. Talking about the product specific regulations, they also play a very crucial role. These can include everything from safety standards that vehicle must meet to fuel efficiency standards. Hyundai's vehicle must meet these regulations in every market they sell their vehicles. As countries become more environmentally conscious, emission standards tighten. The shift towards electric and hybrid vehicles is just not a response to emission standards, but also a strategic move to position Hyundai as a leader in the global certified mobility market. This will strengthen Hyundai's electrified vehicle lineup. Hyundai Motors, as a major player in the global automobile industry, faces a variety of economic and political risks that can significantly impact its global strategy. Let's talk about the economic risks. Economic risks that Hyundai might face may include economic factors such as fluctuations in currency exchange rates that may affect its profitability, especially since Hyundai's presence across multiple countries. Economic recession or slowdowns is another factor that can lead to reduction of demand. For instance, the slowdown in India market led to job losses and affected the overall company. Another major economic risk facing all automobile manufacturers is the ongoing global chip shortage. Hyundai is mitigating the impact by reducing the output of popular models and temporarily halting production. Other raw material costs, such as rubber, steel, etc., will also impact its overall financials. Now, let's talk about the political risks. Hyundai operations can be impacted by political instability and changes in governmental policies. Adverse governmental relations can lead to higher taxes and stricter import and export policies, which can impact the business of Hyundai as a global brand. For instance, Hyundai's complex ownership structure faced questions from South Korean government arguing that the controlling family had more power at the expense of the common shareholders. In another instance, Hyundai faced backlash on social media for its boycott in India for social media posts which escalated into a diplomatic row. Culture and norms play a significant role in shaping the global strategy of an automobile company like Hyundai Motors. Cultural analysis. Taste and preferences of the consumer. The design of the car, its size, and features are dictated by cultural factors. North America's preference of SUV is not shared across the European counterparts who deal towards compact cars. Hyundai addresses these consumer preferences and caters to such cultural nuances in its product lineup as it offers hatchbacks to SUVs with a variety of features across all its products. They use latest technology, aesthetic designing, and safety features that appeal to a broader range of customers. Norms and cognitive pillar, societal beliefs. Various societal beliefs may impact Hyundai business strategy across those societies and shape its marketing strategies. These days, some societies see car ownership as a status symbol, whereas others are moving towards ride-sharing electric vehicles. Being an environmentally conscious consumer, in societies where car is a status symbol, Hyundai has positioned itself as high-quality vehicles at reasonable priced brand. Similarly, it has started focusing on electric and hybrid vehicles where environmental consciousness is dominant.
As we embark on deep dive into Hyundai's commitment to ethical CSR and sustainability, how these principles mesh with brand broader global business strategy, the automotive world is rapidly changing, and Hyundai's strategic approach ensures it does not just keep up with the pace but leads responsibly. Ethics. Hyundai, a global automotive giant, navigates complex ethical challenges ranging from ensuring global safety standards to maintaining transparent business practices. A closer examination reveals a reflection of these institutional theory, emphasizing the role of external pressures on corporations' action. What are the key ethical issues? Corruption scandals involving top leadership, acquisition of unfair competition, potentially hindering innovation, misrepresentation like overstated fuel economy, leading to consumer distrust, allegation of insider trading, shaking investors' trust. What are the recommendations? Commit to operational integrity across the globe, spanning from all businesses expect. Strengthen corporate governance to ensure transparency and accountability. Formulate a strict ethical code for supplier relationship. Commit to third party verification for all product claims. Provide transparent reports to stakeholders. Emphasize areas like environmental efforts. Introduce regular ethical training for staff. Establish a whistleblower system for anonymous reporting of unethical conduct. Transitioning to corporate social responsibility, Hyundai's position on global stage offers a unique duality of both challenges and opportunities. They have significantly impacted global communities through initiatives like educational programs and investments in green technology, yet challenges persist. The issues are as follows: vehicle recall that have dented the brand's reputation, economic aftershocks from pausing production in regions like China, and pressuring safety concerns tied to specific vehicles of Hyundai's models. Yet, there are some recommendations to positively change, which is very possible. Intensify community engagements, cultivate collaboration with NGO and governmental bodies, propel economic upliftment initiatives, and by acting proactively to any consumer safety related issues. Hyundai's vision for CSR is not just about brand image, it's about crafting meaningful, lasting impact that resonate with global communities. The third slide, sustainability in Hyundai. Switching our focus to sustainability, the broader automotive industry's environmental footprint underscore the urgency of Hyundai's sustainable initiatives. They face challenges like environmental repercussion of certain fuel economy claims and current carbon centric proposals associated with hydrogen fuel cells. Issues environmentally challenges like overstated fuel statistics, heavy reliance on carbon intensive hydrogen fuels, limited infrastructure for green technology in many regions. What are the recommendations? Embrace green manufacturing and sustainable practices with a focus on electric cars. Drive innovative solutions such as electric and hybrid technology. Collaborate for expansion of infrastructure for green technology. Establish a sustainable supply chain and reduce waste across all operations. Hyundai's approach is comprehensive, spanning diversification strategies, local approaches, strategic alliance, and a market-specific adaptation. The challenges Hyundai faces underscores the importance of integrating ethics, CSR, and sustainability into its global strategy. With principles rooted in stakeholder theory, institutional theory, and others, Hyundai stands distinct in a crowded place. Proactively addressing these challenges and adopting a robust global strategy ensure Hyundai's responsible growth into the future.
So hello everyone. Today I'm going to discuss about the critical analysis of industry structure analysis, industry's competition analysis, and even strategic group analysis. So let's just get into the first point of industry structure analysis. So the first point is about the global automotive market dynamic nature. So the automotive industry is constantly evolving with the consumer preference and regulatory requirement changing rapidly. This dynamic nature means that the companies like Hyundai must be able to adapt and responsive to market shifts. For example, changes in consumer preference, such as growing demand for electric vehicles, can significantly impact market dynamics. And coming to the second point, it's the influence of macroeconomic factors, it's such as GDP growth rates, inflation rates, and interest rates. These three things play a crucial role in shaping the automotive market. These factors affect consumer purchasing power and consequently the demand for vehicle. In times of economic prosperity, consumers are mostly like to invest in a car, while the economic downturns may lead to reduced demand. So when the demand is low, consumers may tend to like buy when there is low of demand and like low in prices. So that's where like Hyundai must be also be able to focus on. So the third point would be in Hyundai's adaptability. So one of the standout features of Hyundai's success is its ability to adapt and changing market conditions, whether uh, it's responding to the shifts in consumer preference or navigating regulatory changes. Hyundai has demonstrated a keen awareness to the industry's fluidity. So coming to the second point of the industry competition analysis. So the first point would be about the fierce competition. The automotive industry is highly competitive, both at globally and local levels. Hyundai competes with established chains like Toyota, Volkswagen, General Motors, and Ford, alongside local competitors in various markets. This level of competition means that Hyundai must continuously innovate and differentiate itself to maintain itself in the market. So the second one would be about the differentiation and cost leadership. So to stay competitive, Hyundai employs a dual strategy of differentiation and cost leadership by offering a broad spectrum of vehicles, from budget-friendly models to luxury options like Genesis brand. Hyundai creates this to a wide range of for the consumer preferences with a wide range of options for them to pick. This approach allows company to maintain a competitive edge. And the third one would be challenges and opportunities. The automotive industry is an ongoing transformation with a growing emphasis of electric and autonomous vehicles. So it's a loop of cycle where it keeps on changing, keeps on evolving based on the consumer needs and the market shifts. While this presents significant opportunities for Hyundai, it also possesses a challenge. Meeting evolving consumer preferences and complying with stricter environmental regulations is essential for maintaining competitiveness in the global business and even in the local business. So coming up to the final point of my side of presentation. So we are discussing about the strategic group analysis. So the first point would be about the strategic market positioning. Hyundai strategically positions itself in key global markets, understanding and adapting to markets' specific nature. By strategically positioning itself, Hyundai can effectively create to the unique demands of each market. So let's say that if there's a huge demand in India for eco-friendly cars, like a budget-friendly cars, I think that Hyundai also keeps their place over there because it's most used cars back in India and even Japan, which have research. So I think their strategy is really, really good, and they're actually doing a good job with their strategy marketing positioning. And the second point is the Genesis brand and the luxury market entry. So the introduction of this Genesis brand demonstrates Hyundai's strategic move into luxury of automotive markets. So this expansion opens to a new opportunities for companies to target a different set of customers. However, the luxury markets is highly competitive, dominated by established brands like BMW, Mercedes-Benz, Rolls-Royce, etc. And the final point would be about the long term success in the luxury segment. Hyundai's success in this luxury segment will depend on its ability to offer unique features, creating a compelling brand image, and resonates with the concerning taste of luxury cars consumers. So, this challenge highlights the importance of branding and differentiation in this market. So by providing new features, let's say new features compared to other luxury cars, I think consumers would tend to like move to something which is new and which is really really good. I think Hyundai is really good with their strategies, and I'm hoping that this strategies would be used in the future for them as well, as it's gonna aim them for a long term success.
Hello everyone, I'm Vibhuti and I will be taking this presentation forward. To understand the operations and viability of an organization, it is essential to identify resources and capabilities specific to that very organization. Based on the resource based view theory, we can identify resources as tangible and intangible. For Hyundai, some tangible resources are the manufacturing units, machinery, car dealerships, showrooms, inventories, assembly lines, and the research centers. On the other hand, the tangible resources identified are partnerships Hyundai holds with other companies such as Kia, relationships with its suppliers, patent rights, intellectual property. Hyundai holds skilled workforce and the brand image. After conducting research and analyzing Hyundai's case, an interesting strategic move was noticed right after World War II. Hyundai realized the opportunity for growth and decided to expand on some firm specific resources such as skilled labor pool, local demand trends, supporting industrial units, and extreme competition in the market. Apart from resources, it is vital for a company to assess and incorporate capabilities into its operational structure. Some capabilities are directly aligned with resources and operations and are regarded as core capabilities, while some other are secondary to the operations but enable a firm to gain competitive advantage in the market and are termed as competitive capabilities. Using pestle and SWOT analysis for Hyundai, some core capabilities are vehicle design and engineering, reliability, efficiency in vehicle performance, innovation, and global supply chain management. Hyundai has also focused on expanding on capabilities outside of operational segment and have been able to realize competitiveness by utilizing its competitive capabilities such as cost effectiveness in manufacturing, lower price for products, um, production model transferability, and flexibility of automation. After the identification of resources and capabilities, a VRIO analysis was conducted on Hyundai's ability to establish a sustainable hold in the global market. As per VRIO model, the attributes assessed in the analysis are value, rarity, inimitability, and level of organization. The resources and capabilities under this assessment are chosen to be manufacturing units, brand image, proprietary technology, skilled workforce, and global supply chain management. The table provides a summary of the analysis and assessment. In a nutshell, Hyundai holds a strong position in the global market because of its rare brand acknowledgement, technology and design, and highly organized operations. Also, the value generated by Hyundai's global supply chain management gives the company a competitive edge, which is tough to attain. We further go on to discuss value generation by Hyundai using value chain analysis model. The model is used to identify primary activities and supporting activities of Hyundai. The primary activities include inbound logistics, operations, outbound logistics, marketing and sales, and after sales services. All the activities put together contribute to development, production, and distribution networks for Hyundai. Hyundai has been able to achieve global supply chain networking, innovation in production, and localization of distribution networks by investing in their primary activities. Supporting activities in Hyundai include infrastructure, professional development of employees, and technological development of processes and operations. To understand Hyundai's vision and accomplishment, it is essential to evaluate financial ratios of the company. The same has been done by evaluating data from period 2018 to 2021. For this, the following ratios have been analyzed: liability to debt ratio, debt to equity ratio, return on sales, and basic earnings per share. The assessment of these ratios contribute to decision making, and results showed that Hyundai strategically leveraged debt financing to make profitable revenue. This can also be seen in the recent EPS value, which increased by 13,347 earnings per share. Now, Abhilash will take you through the rest of the presentation and will explain the concluding remarks.
Hello everyone. Today I'm here to discuss the international level strategy issues faced by Hyundai and the corresponding recommendation. The first set of challenges revolves around international currency dynamics and political risk. In 2011, the strengthening of South Korean won against the US dollar significantly impacted Hyundai's profitability. Further, in 2017, Hyundai faced challenges aggravated by geopolitical tensions between South Korea and China due to the deployment of THAAD anti-missile system. To address these issues, our recommendations are twofold. Firstly, adopting hedging measures to manage currency risk efficiently, ensuring stability in financial performance. Secondly, undertaking thorough geopolitical risk analysis before venturing into or expanding in any market, and having contingencies in place, especially in regions prone to political risk. Second is international competitive dynamic issues and strategies. Hyundai faced increasing competition in global automotive sector, not only from traditional giants like Toyota, General Motors, and Ford, but also from newer entrants like Tesla. Additionally, the company has struggled to adapt to the shift of consumer preferences, particularly in US markets increasing tilt towards SUV. To address these challenges, we propose a three-pronged strategy. First, increase research and development spending to ensure Hyundai remains at the forefront of technological evolution. Second, engage in collaborative ventures by partnering with other entities, facilitating knowledge and resource sharing to strengthen Hyundai's competitive edge. Lastly, staying atop market trends through regular market research will allow Hyundai to adjust its offerings proactively, positioning itself as forward-thinking automaker. Now let's delve into the corporate level strategic issues. Hyundai faces the challenge of managing risk across various markets with significant disruptions in places like China. Moreover, there is a delicate balance to maintain between short-term financial objectives and being future ready with cutting-edge technologies. Our recommendations to address these issues are as follows. Firstly, geographical diversification is essential. Spreading operations across multiple markets will reduce susceptibility to problems in a specific region. Additionally, investing in emerging markets with potential can be a strategic move. Secondly, implementing a balanced scorecard approach, factoring both financial and non financial aspects, can provide a holistic view of performance. Regular strategy reviews will ensure alignment with organizational goals. Lastly, in multinational strategy domain, Hyundai has successfully navigated cultural disparities in markets like Russia and India, emphasizing the need to blend into local culture while maintaining global standards. However, there's a challenge in managing supply chain risk across various markets, especially when balancing cost cutting pressures with quality assurance. To address these challenges, we recommend investing in cross cultural training for better communication and understanding of regional nuances. Furthermore, local hiring can enhance cultural adaptability. In terms of supply chain, maintaining close relationships with suppliers, diversifying the supplier base, and implementing an ethical supplier code of conduct will fortify the resilience and ethicality of supply chain. In conclusion, Hyundai faces multi-faced challenges in international operations, from currency and geopolitical risks to competitive dynamics and corporate level strategic considerations. Our recommendations aim to not only mitigate these challenges but also position Hyundai for sustained success in ever evolving global automotive industry. Thank you.